Okay, folks, so we're going to talk about the scaling strategy for trading multiple funded accounts or multiple evaluation accounts. Now, what most people are tempted to do is to get what I call straight line funded accounts. And that's basically, or evaluation accounts, that's to get a whole bunch of accounts, get a bunch of them lined up, all identical, get them all lined up, and basically have them all copy. We call this like a straight line approach, right? You get a bunch of them, and we've seen people do this with 20 exactly, anywhere from 2 to 20, and everything's identical. Everything's copied straight across, like straight line copy. And that's actually what we don't recommend. And the reason is we have actually had someone do this with 300K. If you can imagine 20 300K accounts, all straight line copied, meaning everything's identical. Everything takes the exact identical trades. And the problem with that is what? What's the problem? Well, what happens if they all blow up? Well, you can't just go buy another one because everything's maxed out. You have a maximum, Apex allows a maximum of 20 accounts. And if you have 20 accounts, you can't just go get another one because you're already maxed out, right? So what we recommend is a staggered approach, and we'll talk about that a little bit more here in just a minute, but a staggered approach, okay? Now, what we recommend, number one, is that you use a 50K account. 50K is our preferred account. Now, you guys will see that Apex does offer a 25K and a 50K. Well, Matt, a 25K is a little cheaper than 50K. Why would I do one or the other? Well, the goal is very, very similar, whereas a 50K account does require a little bit more as a goal. Obviously, $3,000 compared to 1,500. But if you think about it, if you think about your drawdown is 1,500 here, 2,500 here. But if you think about it as risk of 10%, so if you think about your risk here, 10% of that number would be, this number is 150, 10% of this number is 250. And if I can hold these numbers in place, 10% of our risk is $150, 10% here. And what I would need is I would need 10 trades to hit my $1,500 goal, or I would need 12 to hit my goal here, right? And the difference is just 2 extra winning trades. Now keep in mind, it's not 12 in a row. It's a net of 12 trades, right? So basically 2 more trades and you get double the buying power. Now that is a little bit more work to get quite a bit more buying power. And when it comes to 80% off, it's basically works out to be $33 a month. So it's just a few more dollars per month. And it's $33 a month and change versus, what is it? Let's see. I forget. Let me do the math here real quick. Let me open up my calculator real quick. 147 times 80% off would be basically the difference between $29 and 33. So basically $4 a month, and you get double the buying power, right? Now, if you're to go over here, well, you'll notice 10% of this, you would need 20 trades, right? To risk $300. And if you were to go all the way up here to the 300K, you would actually need about what? You would need 20,000 divided by 750. You would need about 27 winning trades. 27. Now, ladies and gentlemen, I don't know if you have thought about this much, but there's a reason, and a very, very specific reason. I hate that this thing moves, but there's a very, very specific reason why we highly recommend 50K, right? And if you're just starting out and you can only afford one 50K account, then get one 50K. We recommend, if you can afford 450K, then get 450K. No more than 4, start with 4. If you can afford 1, get 1. If you can afford 2, get 2. If you can afford 3, get 3. If you can afford 4, get 4. No more than 4, start with 4. Okay. 450K, that should give you plenty to work with, on your evaluation side. And once you get those set up. You can, of course, never pay full price and never pay for a reset fee, right? Apex offers plenty of 80% off fees. So don't ever pay a reset fee. Don't ever pay full price. Okay. Now, as we're looking at this, this is kind of what we mean by a staggered. Week one, assume you have 4 accounts. Week one, you're going to connect your first 50K account. Okay. Now, after week one, is your balance going to be 0? Your P&L is going to be somewhere between positive and negative, correct? Right? It's not going to be 0. It'll be positive or negative, correct? After at the end of week one, you're going to connect at the end, you're going to now connect account number 2, right? Now you're going to have account number 1 and week number 2. At the end of week 2, you're going to now connect account number 3. This is a staggered approach, right? At the end of week 3, you're going to now connect account number 4. So now you're going to have all 4 accounts. Now, if by chance any one of these accounts blow up, if you hit your maximum drawdown, remember your goal for a 50K account, your goal is a positive, grow that account $3,000 without losing 2,500, 2.5K, your account gets funded. In the event you lose $2,500 in any of these accounts, guess what? You have 3 more accounts to continue working, right? And guess what? Let's say that that you bought your account on May 1st, right? Let's say you bought any of these accounts on May 1st. If any of these accounts blow up on June 1st or July 1st or August 1st, guess what happens if your account blows up? You get a free reset. Now, if you're used to using what would be considered an old school, kind of like an old school funded account, previously an old school funded account would have cost something like $500 for this is what it used to be. $500 if you blow up a $500 50K account, you have to pay another $500. That is not how it works now. You pay $33, but per month, if it blows up on your billing cycle, you get a free reset. Now, there's a reason strategically why we recommend this staggered approach. We do not recommend this straight line copy. Okay. They all blow up. That's bad. You have to start all over again, right? You want this kind of strategic approach. Now, an analogy for why people do this is imagine having 5 or 6 restaurants on the same block that have an identical menu, right? Side by side, identical menu. Everything is identical. The question is, why would you do that? Why would you have a restaurant? 5 or 6 that are identical, have the exact same menu, exact same floor plan, exact same interior. Everything's identical. Why would you do that? That doesn't make sense, but yet that's what people do. Something would have to be different. And what we're recommending here is that you stagger your starting weeks, right? So in week 1, again, you're starting with just 1. You can have 4, but keep 3 of them kind of in the background, right? By the second week, you're now starting account number 1 and 2. By the third week, you're using account 1, 2, and 3. By the fourth week, you're using account 1, 2, 3, and 4. So you're not getting them all funded all at once. But the trade-off is you're not blowing them all up all at once. That's kind of the idea here. Does that make sense? So the cool part here is that you're kind of using this strategic approach. And what you're able to also do is, this is kind of how we recommend that you do this, is that there's really 3 ways to think about risk. This is totally up to you, but highly, highly recommended. We've done this for quite some time now. There are 3 different ways to handle risk. Okay. There is a moderate, there is an aggressive, and then there is a conservative risk. Okay. Now remember, your drawdown is a maximum in a 50K of 2,500, right? we'll say but we're talking about a 50K account. Okay. 50K account. Your drawdown is 2,500 max. Okay. Conservative would be 5% or $125 per trade. Okay. Moderate, which is what we recommend, 10% or $250 per trade. Aggressive would be 20% or $500 per trade. Now, most of you would think, hey, Matt, why don't I just do aggressive? Because aggressive would get me there quicker, right? But that's kind of like saying, hey, I'm going to cook my turkey instead of 225 degrees for 4 hours. I'm going to do 450 for 2 hours, right? Doesn't always quite work out as you would think. It doesn't it doesn't work like that, because if you blow up, you almost get there and blow up, you have to, guess what? Start all over. If you can think about it like slow and steady wins the race, if you almost get there and you screw up, you have to start all over at the beginning. Whereas moderate, this is what we highly recommend, is 10% of your risk, right? 10% of your risk, you only need 12 winning trades, not 12 in a row, a net of 12. So maybe what that means is maybe 15 winning trades and 3 losing trades for a net positive of 12 winning trades, right? Or you could say 12R, 12 times my $250 is my $3,000 goal. Now, we have people who've got that done in a day. We've had people that it's taken months. We have, everything in between. But the idea here with the scaling plan is to be smart, to be strategic. Don't go all in. People ask us, how do I use a trade copier? You have to have a plan. That's the first thing. And the reason we recommend that you use this is you're not paying for a reset when you do it this way, right? There's no reason to pay a reset. Most reset fees are like $85. Now, when you do this approach, you don't ever have to pay for a reset fee. You're kind of taking advantage of that free reset on your billing cycle, right? So your billing cycle. So if you were to look at my accounts, I have, let me open up my notes on my accounts. I have accounts that I opened up accounts on the 14th, on the 20th, and on the 26th. Okay. Now on my calendar, on my Google Calendar, I have notes on like the 11th. So like 3 days before, right? So like 3 days before that says, hey, if my account is down, let's say $2,000, I'm going to intentionally take some trades to blow up an account. Why? Free reset. There's no reason to try to dig myself out of that hole when I can get a free ride back up to zero, right? I don't have to climb out of the pit. I'm just going to take a free elevator back up to zero, right? If it's negative at all, really anything, if it's down like a couple $100, no big deal. But if I am down close to my threshold of my drawdown, I can manually take a trade, intentionally blow it up, and guess what? I can get a free ride back to my zero because of that free reset. So, but I have to be very intentional. I have to know, when is my next reset? When is my next billing date? The same thing on my 20th. I have to know which account. So on maybe the 17th, I'm going to look at it. Maybe on the 26th, maybe I'm going to go for the 23rd. You have to know this, right? So on the 26th, it's going to bill me. On the 27th, I'll see the new account. When I log into my account, I'll see the new account is like logged in. The new account will show up in my dashboard when I log in Apex. It'll show up. Now that assumes obviously I'm using the same account and it's paid up and everything's good to go. The new account will show up and will appear in my login. So it'll bill me on my billing cycle day, and then the very next day it'll show up in my account. Okay. Now, Ideally, you can take advantage of these on different billing cycles. That's the ideal way. You're not taking advantage of them all on the same day. If you have them all on the same day, that's okay. Just again, take advantage of them, start them, stagger them. Do not do this straight line copy that some people love to do, where it's like the restaurant, a bunch of them, everything's identical, straight line copy. We do not recommend that you do that. Please hear us, okay? And once you've done it and blown up your account and all of them all at the same time, and you start all over, and it feels like you're, like everything's back to square one, you'll understand why we don't recommend you do that. Okay. So please hear us. Now, again, we highly, highly, highly recommend you use that 10%. 10%, that's the moderate. It's not the slow boat to China, but it's not the super aggressive, right? Now, think about this, folks. You will have some winners and some losers. Okay. You will have some winners and some losing trades. That's part of trading. You don't know what's going to happen first. So if you get super aggressive and you have the losing streak first, just like if, let's say, you're flipping a coin, you can have some, heads and some tails, some winners and some losers. You don't know if you get a string of losers right out the gate or a string of winners. If you get a string of winners right out the gate and you're aggressive, congratulations, you get your account funded pretty quickly. However, you get a string of losers and you're super aggressive, you blow up your account, right? But if you're moderate, you can sustain the losers. Then you hit the winners, and then you're back to being positive, and you have a couple losers, and you get back to having some more winners, right? You can have some losers, and then you can have some winners, and you have some losers, and you have some winners, and over time, you're going to grow that account, right? The problem is if you get super aggressive, you blow up your account. Then you start over, and then you get aggressive again, then you get aggressive again, and you guys can see what happens. And maybe 3 or 4 or 5 months later, then you get a winning streak, and then you get your account funded. Whereas if you just would have taken your time and done what we recommended, you could have got it funded in 3 or 4 weeks, maybe, right? Can't guarantee that because obviously the market has to cooperate, but you could have gotten it funded in 3 or 4 weeks. Whereas you try to go fast and you end up blowing up and it took 3, 4, 5 times as long. Okay. So that's kind of what we recommend for getting an account funded and using the scaling strategy. And this is what we refer to as, as phase one, right? This right here is phase one, is kind of getting up to 4 accounts funded. And the idea is once you get that account funded, then these become PA accounts. PA is performance accounts. And then you're eligible to request money. You're able to request withdrawal dollars coming into your checking account, your savings account, whatever. You're able to request what they call payouts, and that's where the real dollars flow to you into your bank accounts. So that's how that works, and that is the process of getting started with funded accounts and some scaling strategies. We will talk more in a different session about getting into additional funded accounts and scaling all the way up to 20 funded accounts. But ladies and gentlemen, that is how we get into phase one. Hope you enjoyed.